Hello everyone, this is Teddy Keckstadt from Forex Trading Unlocked. Excuse me, and we are here on May 26, 2022 with a Forex trading and cryptocurrency market analysis for you. Before we get into the main webinar, we would just want to remind you with our disclaimer that this is for illustrative and educational purposes only. And if you haven't done so already, please subscribe to our YouTube channel or our Twitch channel, Forex Trading Unlocked. And when you also check out the book High Probable Japanese Candlestick Patterns, written by yours truly. It's available on Amazon.com in paperback and Kindle versions. All right, we have the Forex-Trading-Unlocked.com website pulled up. And I just want to say hello to all of you out there on YouTube and Twitch and Discord. And if you have any questions along while we're broadcasting this webinar, please don't be afraid to put something in the chat box, and we will try and answer your questions and get to it as we get through this webinar. So, we have a lot to talk about today. We still have half a day of trading going on for us in the United States, and another thing we have going on for us is a holiday weekend coming up in front of us. Now, holiday weekends are definitely a time when we have start to see a little thinning of volume. You have a lot of air pockets, if you will, gaps where there's a lot of volume traded, especially even in some of your most liquid markets. Remember that it is a holiday weekend for the United States. On Monday, the markets will be closed, although the European markets will be open. The currencies definitely will have a little bit less liquidity, but however, that doesn't mean they won't have a lot of volatility, especially with what's going on right now. We know that for sure when it comes to the currency markets, we have a lot going on, especially because of all the geopolitical things that are going on as well. All right, so I am just trying to get you set up here on YouTube, by the way. Thanks for that like, by the way. All right, so we're going to bounce around the website here. And if you haven't been to this website, you go to our Market Analysis tab and hit the Forex Trading Unlocked workstation page. And that pulls up a nice place to do analysis. When we're streaming, like right now on every page, you can see this right here, that we're streaming live. So if you're not... if you're even on your cell phone, you can pull up our stream from our website. You don't have to log in. From this page, we have the calendar at the beginning of it. We can see pending home sales, and a couple other things are coming out yet today. These may make the dollar move. So we have the Euro-US dollar having a little bit of action to the upside. Yesterday, there was a little bit of a sell-off. Gave a short-term potential sell signal, and we'll see if the high stays in place. It will hold. So we have a sell signal that occurred on the close as of yesterday, with our just beyond our high of 2 days ago, which is at 107.48. So basically 107.50 we have a stop in for a short-term short trade. Now this trade happens to be with the trend. The overall trend is bearish right now. Currently, obviously, it's been rallying for the past 2 weeks. However, we have come into some critical support. If we take our last major swing high down to our last major swing low here, we can see that right now, as it stands, we are right below the 50% mark on the Fibonacci level. As you all know, excuse me, Fibonacci is, this will probably help if I have some orange juice. I haven't talked yet to anyone to say. So, there we go, much better. The euro, once again, gave the sell signal, and we're, for as far as resistance here, we are right butting up against this 50% level for the Fibonacci. Now, Fibonacci and Gann, and also as far as an old trader's target point, 50% is a very big retracement target. Typically, if it's a corrective move, this is one of the areas where usually it becomes a very strong pivot where the market turns back, especially if your trend is very strong. This correction right now is hovering right below it. I think that if we take out the high from 2 days ago, we still have a chance of popping up to 108.62. However, I don't think we're going to be able to get higher than that. One of the main reasons is, let's take a look at the interest rate market. We have this the 30-year Treasury bonds down 13 ticks. We have the 10-year down only 2 ticks, actually. So there's a big spread right there with the long terms pushing rates higher. with a sell-off right there. Now we know that the bond market has been rallying as a whole, just as the dollar has been correcting as well. Now remember, interest rates are a function of currency pricing. So right now, on the day, we definitely have rates going higher. This is helping to give a little bit of strength to the dollar, and also retard some of the strength in these other currencies against the dollar, meaning that, and as we get into it, you'll see that they're not able to maintain their trend. So they're starting to run out of gas. One of the main reasons is because the interest rates are starting to stall as well. They've been rallying for 2 weeks. They may have a little bit more upside going into the numbers that are today and tomorrow, and then I think that's about it. If we don't top out in the next 2 days, I would say definitely by early next week we should see that happen, and then start to see a slide in the interest rate quadrant again. This would give strength to the dollar, and this would help to also bring back this trend going to the downside. So be mindful of that and just realize that this trend here, there's no reason to be really bullish the euro. The economy is faltering there. They have so many problems going on. The sanctions on Russia are hurting Germany and all the other countries of the EU, and especially Germany, very, very hard. So this problem is not going to end anytime soon, and especially if this doesn't start to get to brought to the table within the next couple of months, literally, you know that we're going to be going into wintertime next year with this going on, and it's going to be really hard on the EU, and especially a lot of countries like Germany that have had to shut down manufacturing plants because of these embargoes. One of the biggest places Germany exports to and the EU exports to is Russia. So now that they're cutting themselves off from Russia, what do? They have nowhere to sell these goods to, especially because there's a lot of things that are catered to and designed and made explicitly for the Russian community. All right, so this weighs on the euro. We're looking for definitely another move to the downside. So we'll see if our short-term sell signal that occurred yesterday will hold. Right now, we do have some numbers coming out in a little bit, the housing market numbers that could probably jolt the interest rate market, and if it does, that should have a little bit of an impact on the currency market. So we'll see how that manifests over the course of the day. Right now, it looks like the euro is struggling, and especially if the bond market continues to go lower, and if oil starts to go up, and that's another one too, because this is going to be pertain to some of the other markets. Let's see on the CME website. Let's go see where the futures are at. Now this is in delay because that's the way it has to be. Oh, oil's rallied big since I was, wow, in the past like hour. I haven't looked at it. Okay, so oil's back to above 112 in the futures. It's up over $2. That is very bullish for certain dollar currency pairs. So we'll get into that. So this means with a rallying oil market and a breaking bond market, the euro US dollar is going to struggle to push these highs. So right now, our low risk short play from yesterday, if you watched our video, is even though it's a little bit against you right now, it's a low risk short play that doesn't seem to have that much of a problem here right now anymore. I think that if the futures continue to trend the way they're going right now, I think the high may be in for the euro for the day, and we may actually see this market go lower. So you got to remember that the U.S. stock market just opened. Let's see how this balances out over the next like half hour or so and digest the moves from the current the current trading from the opening. Once that initial half hour is burnt off, we'll see what happens as far as what kind of a trend develops. One of the things I would expect to see is if the housing numbers if they don't come out as expected, or if they're worse than expected, that you may see a little bit of a hit in the S&P 500, especially because I think the home builder stocks and a lot of the real estate sector will be impacted by this. It's kind of like how you can see how the retail environment, due to certain things, is hit like like Kohl's and all kinds of other retail outlets. Their stocks have gotten just crushed lately. Now there's a couple that have done well, but for the most part they're not doing well at all. They're actually getting hurt, and this is something that you really want to watch out for, because this is going to impact how the currency market and the dollar is. So remember, a lot of what's going on is not so much dollar strength, it's just that these other currencies are that weak against the dollar. All right, so let's see if we have any questions real quick on Twitch, or if we have any questions on YouTube. Okay, no, we got a couple people out there, but no questions on the chats. Okay, well, don't be afraid to come on out here and talk to us here if you got any questions. All right, so as far as upside, once again, if we take out the high from 2 days ago, we're looking for a test of the 10862 area, where we have this downward sloping resistance line maintaining the trend, and I think that's going to hold. I don't really believe that we're going to pierce through it. Anything can happen, but right now the factors, at least unless the things change, if oil all of a sudden goes back to even on the day or negative, and if there's all of a sudden a big bond rally and 10-year rally, then I would expect the euro to break out to the upside. But right now we're looking for a turn back to support. Now let's just say we don't want to ever pick a bottom or a top, but right now the trend is your friend, and if this is a sell signal that's valid and we start to pull back, let's see how far we can go. If this is just a short-term sell-off, if there actually is strength starting to come into the euro, for I don't know what reason that would be, but you know what? Anything can happen, right? This would be the area that we're looking for. So no matter what, from our sell signal, we're looking for a slide that takes you down somewhere into this little support band, somewhere around 105.48 down to 105.02. If this market is starting to consolidate and build a base where maybe a bigger upside correction is in the future, this is probably the area where you're going to see the market bounce from. Any failure from $1.05.02 in this area here really has this market on edge, because you're not far from the current swing low. Also, trading back down in this area to begin with already confirms, after a lower move low, a lower move high, which means the overall trend is still bearish. So you don't want to try and catch a falling knife. Never try and pick a bottom or a top. So if these other fundamental factors are still in place, like unless there's peace talks going on between Russia and Ukraine, and you see a big sell-off in oil and all of a sudden a big rally in the interest rate quadrant, there's no reason to believe that as we get down to this area, we may consolidate, but then we're going to go down lower and test support. So we'll see how that happens. Remember, over here, let me get rid of this. It's a little hard to see. Get rid of these fibs. All right. Over here, you can see how we have this support right here. So let's do this. Let's give you a little. So we already know that the euro US dollar likes this band between 105, basically 105.70 and 104.90. This is our target area right in here. So we come in here, remember this is where we had support, it failed, and then we broke through it, and then here we had this nice little correction. But if we're falling back to it, that means this is at least our median baseline where we're going to see a lot of consolidation. It may get choppy in here. I don't think we're just going to slide through it. I do believe that if the sell signal is right, we'll come into this area and then consolidate first before we fall off the map and go lower. That's just the way I see it. I believe that this channel here that we're working, we're going to be bouncing off this median point up into this, there we go, up into this area here. So if you can picture it like this, let me give you a little. The way I see it is that we kind of come down here, and then we start to bounce up to here, and then that's when we start to fall like this. So I don't think this is going to happen just over the next couple of sessions. I see this as how we work our way into June. A lot of the volatility as far as the reaction to the war is already priced in. Now it's just a matter of reading the lagging indicators to see how bad of an impact this war is having on the economies globally, and also as time goes by, what kind of shortages and what have you, how that impacts the rest of the world as well. We all know this is not looking good. I would say that it's, once again, like I said, I don't see this coming out of the picture at least until sometime in 2023. Unless we see a resolve within the next few weeks or definitely a month, we know that the situation we're in right now is only going to be, at the very least, where it's at right now, as far as the fighting is concerned. But the drain and the impact on the global economy, that's a whole other story, where now it's going to be enough time will have passed that we'll be like, oh, this is the impact of what the time we're in right now in the spring. So in August we'll have a gauge on what was going on now as far as the numbers are concerned, and then we'll also be able to say that that's trending, and we'll know that that's not a good outlook for 2023. Bullish for the dollar, bearish for interest rates. And that's the other thing too, is the Fed minutes came out yesterday, and you can see how with the pound, it's a little stronger than the euro. And it's where we have a sell signal in the euro. We don't necessarily really have one in the pound right now. It's still in a corrective phase. I think it's running out of gas, but because of the oil going up, which that doesn't hurt the pound, it actually helps the pound versus the dollar. That cancels out a lot of the interest rate trade. I think that the Fed minutes from yesterday, when they reiterated that they're not only going to maintain their raising rate strategy, but they are going to aggressively raise rates. So that means you can expect that at the next meeting they're going to definitely juice the rates a half a point. I personally think that they should do 3/4 a point to a full point. I think because they're so far behind, they're 7-8 years behind when they should have been raising rates, and right now they should be cutting rates to help relieve inflation. You don't raise rates to curb inflation. You do the opposite. But whatever, they're constantly behind the curve, and that's the trend. So at least we know that that fundamental pricing aspect of the currencies is in place. All right, so we're going to take this last major swing high down to our last major swing low here. And interestingly enough, at the same time we had a bottom in the euro, we did in the pound as well. And on both occasions we had a buy signal too. It was a high probable Japanese candlestick pattern. If you read the book, you can see which ones they are. No, I'm just kidding. Real quickly, I'll show you on the euro. This bottom right here, we had this big down day followed by these two little up days. This is a 3 inside up high probable Japanese candlestick pattern. That is one of my favorite buy signals. There's a sell signal called the 3 inside down, obviously to the opposite way. Okay, so and on the same day, or same time period frame, we had a buy signal here, which is a bullish engulfing line buy signal for the British pound. So those currencies both had simultaneous buy signals, different ones, because one's a 3-day pattern and one's a 1-day pattern. But when you have those line up simultaneously, that's when you really know you have a good signal. Which also, when the dollar, that was signaling there a correction for the dollar, which right now we are in a short-term correction. However, when it comes to the dollar index, we're coming off major highs, so it's profit taking. You know, I mean, no matter what, you're still making higher move highs and higher move lows in the dollar index. Conversely, in the pound US dollar and the euro US dollar, you keep making lower move lows and lower move highs, which that is a downtrend no matter what by definition. So always remember which side of the market you should be on, or at least which way it's trending. So what do we do with the British pound US dollar? Well, this one I think is in a little bit of a teeter-totter state of flux. I'm expecting a breakout to the upside in oil. I think that we have a good chance now that we're up at 112 to run up, and if we get through 114, we're going back to that 116 area swing high, and I think then we might start to bounce around a little bit. I would expect it to kind of jitter around in like a $3, $4, $5 range for a couple of days, but then I think see it consolidating before it makes another run up to 130. My forecast is that we will see 150 oil before the end of the summer. I wouldn't even be surprised if we see it before the end of June, and then $200 oil for sure also is on the table for this year. So these are, I've been bullish oil ever since, our communist president signed that order and destroyed the oil industry. So, and that's nothing's going to change that for at least 2.5 years. This is not going to happen. There's nothing that Congress can do. There's nothing that the United States businesses can do, the oil industry can do. This is something that is blocked, it is done, and it will not stop. So, and that inflationary issue is going to really hit us. Wait till diesel is already becoming such a problem, and this is something where the pound is, it's bearish versus the dollar, but not as bearish as something as, say, the euro right now. I think the trend is going to remain there, but it's going to bevel off into more of a sideways, kind of like you can see here how it hits lows and then it chops around for a month or two, and boom, we get a little sell-off like we've had here. Now we're getting an actual correction. This is the biggest upside correction that we've had in, let's see, this is going back. It's the biggest upside correction, yeah, that we have had since back in February. So, I mean, you're looking at, we've gone that many, 3 months without having a move from bottom to top, if you will. And this is, we don't even know if the high is in for this correction. As we speak, it just went bid, but it's right in the middle of the range, and I think it's buffering and having a little bit of an issue because those Fed minutes from yesterday are starting to be digested by the market, and the market gets it overall, right? That the economic numbers are very inflationary. It's going to hit a lot more businesses and services, physical businesses and service businesses. And this will continue to weigh on these markets, which is great because for us, it keeps the trends intact. So there's going to be obviously corrections, whether you're going in a bull market or a bear market currently, but these trends, and for the most part, especially with the currencies, are pretty solid. We should be able to rely on them for not just the next few weeks, but I would say at least the next few months, if not going on into the beginning of 2023. So that's a good thing to kind of focus on, is that if as long as you are confident that inflation isn't going away, and if you're confident that the conflict in the Ukraine is not going to get resolved anytime soon, which I wish would be. I wish they would come to the table and make peace and figure something out, at least get a ceasefire. But right now, the way it looks like, the countries not directly involved want to destroy, they want to overtake Putin and destroy Russia and totally put sanctions on them pretty much indefinitely. Well, that's not going to bring a peaceful resolve to this equation. It's just going to stir the pot even more. Like, to denounce Russia on the world stage and think that you're going to isolate a country, the biggest country in the world that spans 13 time zones, is pretty obtuse. And it also shows that who's the aggressor here? We're not even physically involved directly, but we're promoting basically, another Cold War. I'm not by any means supporting Putin or the attack on the Ukraine whatsoever, but remember, the Ukraine's also been in a civil war for 8 years, so the war was already going on before the Russians got there. Just most Americans and the rest of the world didn't care. Now all of a sudden they do. So, and everybody thinks that the conflict just began a few months ago. That's not the case. So, and that's why the resolve is not going to come overnight either. So we'll see what happens, and this is going to impact these European currencies the most because they're right there on the borders. So, and especially as the ruble gets pegged to the oil, that's another thing too that's going to start to weigh on it. All right, so far the numbers in the stock market opening hasn't done much to the pound. You can see as a whole, there's not even much of a trading range today. So where are we going to go? Well, to the upside, we have still a little bit of potential here. We can get up into this range here. I do believe that this will be where you get capped, somewhere between this 127.30 up to 128.56. Real quick, just want to see if we have any questions on the chat. No, not there. What about Discord? No questions. All right, cool. But well, we got a couple more viewers on Discord. Okay, so you guys requested us to can stream out to Discord. We did a year ago, and then we stopped, and now we're back on it. We're trying to see how this works, and just in a couple of episodes, we're gaining a community already. All right, cool. I guess you guys like that. Hopefully you can hear everything all right and see everything all right. So upside, this is our most likely highest point that we're going to see this get to. And as you can see, this nice slope, downward resistance line, keeping this channel intact, comes right into this area. And I think it's going to be a good stopper also. You know, this is why you kind of can tell that the trend is probably going to remain intact, because we are just going up towards that upper part of the channel. And this corrective area here would also, in order for us to get up there, it's not so much that oil needs to rally so much as that the bonds and the 10-year and the 30-year would have to start to rally really, really, really big. And the fact that they've been rallying is also one of the reasons why you can see this move here. And just to let you know, if you go to forex-trading-unlock.com, when you go to markets, you can go to the Forex page. That pulls up all kinds of currency pairs, so you can directly go to them and index them. Excuse me. But if you go to the futures tab, now remember, our Forex stuff is all in real time. There's only a slight delay because you're going through, obviously, a website, you know. But here we go to the 30-year futures, and here we can pull up a chart. Now, if you aren't a futures guy or woman, you don't really need to be, but you do need to pay attention to where the 30-year and the 10-year go if you're a currency trader. So on a weekly basis, we had a buy signal in the interest rate quadrant a couple weeks ago, and so far we've had nice follow through to the upside. How far can this rally go? Well, we've had a very steep decline, but even if we have a big move to the upside, we would be capped here definitely, I would say, at 0.618, just because we know that the Fed is in an aggressive interest rate raising stance. More likely, it would be right here around 147, with 147 at 22 and 22 ticks would be the area where we'd run into resistance and most likely stop on a dime. I don't think that we have the ability to push a rally up to 150. The only thing I could see that would really, we would have to see resolve in the Ukrainian-Russian conflict. And simultaneously, we would have to have, I would say, some really good economic news, like where some of our leading indicators come out completely unexpected to the better, which it could happen. You never know, but very doubtful. However, this trend, if you look at here on a daily, it'll make it a little bit more clear how this is impacting the currencies. So here we have May 9th is when the interest rate market bottomed, and it's been trending higher since then. We go down to here, May 13th. So May 9th was back here. Interest rate market already turned, and it doesn't happen simultaneously. These markets don't just flip on a dime because one goes one way and one goes the other. But as one does start to develop a trend, that's how you see how that trend, the downward trend of the interest rate quadrant, stopped. And once it did start to form a rally, this market started to slow the velocity of its slide and turn around. And also, when you get this buy signal coupled with the fact that you already have a bond market that's been rallying for 4 to 5 trading sessions, that really helps to give you a boost to a signal like that. So that's when you get it, where you can use these other markets, as they are the best indicators for knowing direction, you know, and especially reinforcing trends, you know, or corrections on trends. Remember that currently right now, this market here is obviously in an upward trend, a little negative on the day, but it is in a bullish trend on an hourly and daily basis, and a short-term daily basis at that. On a weekly and definitely monthly basis, this market is a bear, you know, so, and setting us up to rally into our high. Now we set a higher move high. Could this be it? I don't know. There's obviously a lot of resistance at this past swing high here. So if we can take out the last swing high here, we got a good chance at running up to here. I think the 127.30 should put a cap on the market, keep things in a neutral posture. Then maybe we get a little sideways range trade that develops, and then I would expect us to see the market go back lower, especially as we get closer to the next Fed meeting. and another interest rate hike. That interest rate hike will help to support the dollar once again, and not also that. And remember, in this case, that the dollar is not strong. It's just there's fundamental variables that are making it stronger than other currencies. The other currencies are just that weak. And unless there's a good economic outlook in the UK and the EU, I don't see the pound getting any real show of strength any time in the short-term future. Should they have good economic numbers there, remember they are sovereign, they had Brexit, they are no longer part of the EU, then I believe you may see a change in trend, at least in the short run. We'll see a divergence where the euro US dollar will continue to trend lower and the pound US dollar will start to turn around and become a bull. So we'll see, but those numbers have to happen first. If they don't, I don't see it happening. Sell rally forecast for now. Is it the high end? I don't know. I think we still have a chance to spike up a little bit higher in the British pound US dollar. Excuse me. If, let's say, that the high is in now, well, this is not a good way to do it, but let's just say that we do spike up a little higher. And then say that I'm right about getting up to this 127.30 area. If we turn off of that, we should come back below where we're at now in a very short amount of time, you know, and I would expect us to be somewhere around 124.40 down to 123, upper 23.80, 90 area. For a quick sell-off into that area, then maybe consolidate. I would expect over the next few weeks that when we see how this manifests, that it's going to be a lot of digestive trading. Like right now, it's come off this heavy trend. Velocity of the downward momentum is very, very strong. Now it's starting to bounce and slow that momentum, and now it's going to, I think, just buffer and range trade lower where it keeps on kind of nibbling at support, you know, and the resistance will keep on, it'll keep on making lower swing highs. So lower move lows, lower swing highs, maintaining a bearish trend, but it's not going to be at a very drastic slope to the downside. It's going to be more of a gradual, just inching along, just slowly decaying. Kind of like if you're old enough to remember Skylab, how it took a long time in decaying orbit before it burnt up and, you know, crashed into the ocean. And yes, that did happen. You can look it up. So I remember that as a kid where we were watching it for days as it was getting ready to come in, and they did get the math right and knew that it was going to crash in the ocean, luckily, although there was debris that did kind of scatter all over the place. All right, so US dollar Swiss. This is a very interesting trade, what's going on here with the US dollar Swiss. The velocity of this slide is very, very strong. You can see how in a very short amount of time this correction has really taken a lot off the market. It got above parity, it was bouncing, hugging above here. Then all of a sudden, boom, which in just a few sessions, it really, really came back. But you remember, if you watch our videos and you know me, well, I always remind you that markets tend to go out like they come in. We had a very, very explosive rally to the upside. This all was mostly because of the sanctions put on Russia by the Swiss. If any of you are familiar with the Swiss at all, then you know that they don't get involved. This is something they don't do. They're known for neutrality. It's their one thing that also the world accepts. Like people may not like it, but it's a safe haven, and it's a place where also neutrality. A lot of peace accords during wartime, from especially in Europe and in the Western world, have been handled there because of their neutrality. It was a safe place to go. It's like no man's land, you know. So, and they broke their neutrality, and that all of a sudden just crushed the Swiss currency. And that's one of the reasons why you see this explosive rally with the dollar versus the Swiss, because they're both flight to quality currencies, but the Swiss is no longer a flight to quality currency because there's a lot of countries around the world that are now pulling funds out of their banking system. Their banking system is huge, and they can afford to have some countries pull out, but it's not that impacts their business. It's not how they do things. And now other countries know that if they're in conflict with the West, or some country that the West supports, that their neutrality is no longer neutral, and they're all of a sudden their funds get locked up. They can even be seized, and that is where there's no value in Switzerland anymore. Beautiful place to visit, but not a great place to put your money anymore. And that's going to have a big impact. I believe that we'll see the U.S. dollar Swiss back above parity in the not too distant future. But let's figure out the numbers here, right? Okay, so the low from a few sessions ago, this is our key pivot right now in the short run, holding up support. As far as the correction goes, from our last major swing low up to this high. Actually, I better get rid of this so I can make sure that this is right. There we go. Okay, so as you can see, we've already come into our downside target zone a couple sessions ago. So the question is are we just going to bobble around in here and then rally, or bobble around in here and tread lower? Excuse me. With oil now is up over $3 just in the short amount of time that we've been talking, and this is in delay, and I have to tell it to you in a delay because that's the law. Can't tell you the other stuff. Bond market's coming back a little bit, but oil definitely getting pounded there. Or, well, I mean, excuse me, we're getting pounded because of the price of oil. So that is also not good for the Swiss. All right, so that's another reason why this rally or this break might be faltering. Higher oil impacts the Swiss. Also, so does the interest rates, and that's something that I think is, we've seen the extent of this correction. If we were to test support again, I think this 95.17, this is the extreme. I don't think we're going down there, but we could still spike down there. That would be it. I think after that, where we would at the very least go sideways and then start a rally again. My view is that, especially as we get closer to the FOMC meeting and another rate hike in the U.S., is that we will really, really come close to getting this, market back above parity. The interest rate equation is something that's going to dominate the U.S. dollar Swiss, and especially, like, once again, since I said this lack of neutrality also makes it something that this is new. This is something that the Swiss, they did what they did. They can't backpedal on it, so they're stuck with it, and this is going to give strength to the market, the U.S. dollar. So even if the U.S. dollar is weak versus other currencies, versus the Swiss, I think in the long run, for quite some time, it's going to be a big bull. So there's no factors right now that seem like that's going to change. So this is something we can ride. Remember what I was saying earlier, the nice thing about what's going on in the financial environment is that our trends in a lot of currencies are really looking pretty good as far as the long-term impact. So you got to have patience. It's not sometimes it's not fun really just hanging on for a very long time. But you know what? Don't you want to make money? That's why you're really here. So, and that's why I'm here, and that's what I would take advantage of. So we have our support line here. Obviously, if we fall below 95.17, well then the bear is it's hitting hard. But right now we don't have any swing high to even try and figure out the momentum to the downside. I wouldn't try and catch a falling knife, but I also don't think you really have much to the downside here. I think you have more likely a chance to rally. And let's just say that we have found the bottom. Where can we go? I would say minimally we get a challenge of this 97.61 area, and then 98.15 is going to be critical resistance. Any trading above there, and this market is going to be flying right at parity. I think that if anything, once we bounce here, that this will become a little bit of a area of consolidation before we really blast off. Kind of like basically kind of trending like this, and then kind of going like this and then going higher. So I don't think it's a race to the top and to parity, but I do believe that it's very likely that if we haven't bottomed in the Swiss, we will soon in this range. And once we can gather a trade, especially above 96.28, once we can definitely hold trading above there, I think your momentum is just going to build, and we'll see a surge to the upside. Now, I don't necessarily think that we're going to see it explode, like have an up day like this was a down day, but I can see it going like this little pattern here, where we go for a week and a half to 2 weeks with seeing nothing but upside action. So it'll be interesting. We'll find out how it all comes out, obviously. But as far as the fundamentals that we've been talking about, these things are in place, and there's no reason to think that they're going to change anything anytime soon. Let's see, do we have any questions on Twitch or on Facebook? No, or no. What about on Discord? We have none over there either. Okay, well, we got lots of viewers. We got a couple of likes there. We want to thank you for that. That's really nice of you guys. Just want to send this one out here to you guys on Facebook. Sending you guys a little link here. All right, thanks. All right, so we have the US dollar Swiss done. Now let's go to the US dollar JPY. All right, US dollar JPY has had some very interesting action today. It was kind of a slow trade to start off yesterday evening as the markets opened up in Asia. And then all of a sudden, it really just fell out of bed, and it was hitting support hard, and it looked like it really just wanted to bang new lows, like really take this US dollar yen and stretch it down through support. The way the futures were going too, and with the interest rate quadrant and stuff, it also looked like the US dollar yen was supporting a big sell-off, because at that time interest rates were higher, the pricing was higher, meaning rates lower, and oil was relatively flat. There was no action going on in that. But now, as you can see, especially with the explosion in oil to the upside and interest rates still being negative, that the US dollar yen has, boom, it just is not a balloon underwater rally. It's not that explosive, but I'll tell you what, it had quite the bounce today, that's for sure. Momentum fundamentally is to the upside. This thing is a bull market. Right now, it's viewed as a downside correction, what we're viewing right here. Do I think that it's going to last? We could still play with support a little bit, but if oil really holds where it's at today and stays up there and gets some follow through tomorrow to the upside, it's going to be hard to see that or believe that the US dollar yen wouldn't be starting to make a move to the upside. If there was a big bond rally, then I could see that might slow things down, but I don't see the bonds really. They still have room to the upside, but right now with the economic numbers, it seems like they're really hard pressed to get a rally there. And if they don't, and they start creeping lower again, coupled with this higher oil, and oil is a big deal for the trend here, I see the US dollar Japanese yen going back up towards its highs around 131 there. Now, do I see it happening in a trend that was like this here or this here? No, now I think that things are smoothing out, and we have the potential, without a doubt. Still, I think that the US dollar yen could go up to 140 sometime over the next couple of months. Now, when we had this spike here and this little correction, this was when the Bank of Japan said that they were going to defend their currency once it hit $1.30 or 130. What happened with that? Well, they didn't do anything, and the fact that they didn't do anything, and then right here they said they still were going to defend their currency, but they said that they were also going to continue to buy their bond market and keep it at 0.25%, and they said they were going to use unlimited buying, purchasing, which by definition I understand what that means, but I also don't understand how that's possible, because they don't have the resources for that. So for them to be propping up their bond market, and then that's going to cause inflation there, and it's going to cause a lot of issues eventually. But it's not going to help support the yen. It's not going to make the yen a bull, excuse me, or even remotely stronger against the dollar, because you need to compete with our interest rates. And we just did a half a point, and we know that there's most likely another half a point on the table. And if that's the case, you know, the Bank of Japan is way behind the curve, especially, you know, they're more behind the curve than we are. However, they don't have all the issues that we do. They don't have the inflation that we have. Excuse me. So, and there's some, and now, thanks to our president, there's all kinds of tariffs that were just lifted on them, just in this trip that he just went over there. This doesn't help our economy, but it does help Japan's. That probably is one of the reasons why we've been treading it through support over the last couple of days. But it's a speed bump. It doesn't really mean in the long run it's going to impact the consumer in America, and we're not going to get the tax revenue, tariff money that we are off of what we are currently getting. So it's going to not help our country, but it will help their economy. Will it necessarily prop up the yen? No, I think that it's going to help it. Right now, it's done its effect, and now it's pretty much over. I don't think there's much more support you're going to get from it. Not that we couldn't test the lows yet over the next couple of days, but I think we've come into the point fundamentally that we're not going to keep testing support. We're going to make another run for new highs. The finance minister of Japan said they're going to help do everything to defend their currency, but they can't do that without the Bank of Japan. The Bank of Japan needs to raise rates. They're not going to raise rates when they're keeping the rate at a quarter by buying up the bond market. They're artificially keeping rates low. So you can't buy your bond market and then support your currency. How are you going to do that? I mean, there's no way to work that. But we will see what we got here. All right, so as far as a correction here, how much farther do we have to go? Well, we got through the 0.382. And I think the 50% level is pretty much it. I think that the low is in, but it could still, obviously anything can happen, get a little bit lower. If it does, I think this 0.618 is the extreme. So 125.08, this is really where I don't see the market getting much further below that, because the fundamentals just aren't there. Everything is supporting a higher US dollar yen. So now as far as to the upside, well, all we got to do is take out this last swing high right here at around 129.73. This is going to be a key area because, let me get rid of this. The bulk of the trading, if we're going to start to kind of develop a range trade scenario, the bulk of the trading is in this little area right here. Excuse me. And if that's the case and it's going to hold, then we could see this market bobble maybe a little bit before it breaks out to the upside. Remember, that's the way it was trending for the longest time. It wasn't exploding like it has here. I don't see us exploding like this or having a leg up like this to 140 like I was talking about. I can see it slowly grinding higher, coming back, and this will become support, and then it'll, you know, continuously make higher move highs and higher move lows, but in a stretched out form, not with the velocity of a trade like this. And interestingly enough, like I told you, markets tend to come out like they go in. It didn't happen here. We had an extreme rally in all this time, and then we barely even took out this swing low right here. We're treading water right around that pivot. That tells me how strong this trend is. This is not a weak trend. We're in a buy dip scenario. Has it bottomed? I still say yes, it could. I think it has, but it still has the potential to poke down here a little bit. I do believe that this 126.19, I could see us maybe just poking new lows, squeezing out all the weak longs, and then boom, getting a big balloon underwater rally for one day, setting the tone where then it just starts to gradually, you know, snake its way along to the upside. All right, real quick, just want to check, do we have any questions on the chat room? No, don't have any questions there. And what about in there? Nothing on YouTube. All right, you guys are quiet today. Yesterday, everybody was all over me. So, not a bad thing, though. Okay. All right, so far no questions there, but we do have a couple of likes and shares. We definitely appreciate that, guys. All right, so US dollar yen, if we get above here once again, I think we're going to continue to rally, make new highs we're not going straight to 140, but I could see us taking out the last major swing high here. Once we get back into this range, shooting up for a challenge of 130, 140, and once it gets through here, I could see it chopping and then spiking higher, trending a little higher, and then when it has a correction, I can see where whatever level it gets up to, that it'll have something like this kind of a correction here, where as it bottoms here, it will bottom somewhere up here on the next, after the next leg up. We'll see if I'm right. Anything is possible, but right now the way the fund technicals are starting to come back in place, because they're not as skewed as they were before. They were so overbought that most of your indicators weren't helpful at all. But your fundamentals, they always come and help you no matter what. Just remember that. That's why you stick to the fundamentals. If you're an athlete and played any sports, you understand. Okay, well, Australian dollar, US dollar, running out of gas on this upside correction. So this market's a bear. Excuse me. So the commodity rally is something that you would think would be helping this currency, but the fact that the government is slipping in a big way. They just voted in a new government, and their ability to manage and pay their debt, let alone run their country, is diminishing greatly. Canada is on the verge of becoming a third world nation. Now, it's going to be a modern third world nation because they have a lot of technology, but they're running out of money. They're running out of money. They're running out of resources that they need to sustain their society, and there's a lot of backlash because of the lockdowns that are coming back, and a lot of the mandates and the restrictions that are put on their people. And the lockdowns themselves have caused their own internal issues as far as getting manufacturing and mining back online properly, and distribution out of the country. So and with the newer mandates coming and the potential for them going back into COVID lockdowns, if that occurs, you're really going to see the Australian dollar just, I mean, when I say tank, I mean tank. So this currency is falling apart. I don't think there's anything that they can do to hold it up. And the fact that if that is true, then I think that as a currency trader, you have one great trend to lock into now. The one thing I would expect is to see decent sized corrections in the Australian dollar, US dollar. Excuse me. So just like even this was short, look at how boom, like a balloon underwater, had a big, and then just reverse gears and I mean, just fell apart. So I would look to sell rallies, kind of like what we're in the area right now. Even right now, it's a low risk sell against the high plus a couple of pips, because it's kind of out of gas. Now let's see where we're at. If you go off the last swing high down to this area here, well, you're already trading right above the swing high area. Get that out of the way, make it clear. Okay, so so this is a critical pivot right here. You can see how we're just consolidated around there. I believe we're going to run out of gas. If we do poke higher, I would expect it just to be a short-term poke, and then we finally run out of gas. Remember the overall trend, we've been making lower move lows, lower move highs. We're looking to block in that lower move high and then trend lower. If we use this. Okay, so the slope here, the downward sloping resistance line, keeping this trend intact. We have popped out of it, but by attrition now, we're just floating right there. We could slip back under it in a heartbeat. Does that mean it's going to happen? Not necessarily, but I think that once the bonds start to really fall apart, and if oil doesn't get a really big rally, a big rally in oil, like a huge rally in oil, could help Australia in the short run, but I don't see anything else really helping it. We're looking for more action to the downside. So as far as where can it go to the downside, well, at least in the short run, we got a target right here. I know it's the 0.382 level, but this would be a good area where if this is consolidating right now and trying to base, this is about where it would run out of gas. If it fails from 69.94, then to be quite honest with you, I think you got to look out below and expect this market to make new lows down to probably around the 68 even area. This one I don't think is going to have the velocity like it did here back in April to go to the downside continuously. I think it's going to start to gradually snake along and do that. All right, let's see. NZD-USD. NZD-USD is running out of gas. It is somewhat in tandem with the Australian dollar, US dollar, but does not have the strength to the upside, and that's something I would be mindful of. When you do see reversals in these currencies, which are weak versus the dollar, and they correct to the upside, expect more out of the Australian dollar than the New Zealand dollar. On any given day, they may not necessarily react to the same things as equally. Sometimes they do. Excuse me. But as far as pushing higher move highs, oh God, I had to get that out of my system. Instead of continuing to make higher move highs and higher move lows, I think we're running out of gas here, and then your chance of sliding, that's where you'll have more of a move than you will with the Australian dollar. As you can see over the past couple of months, every downside move has been brutal. Every downside move here doesn't have very many green days at all, you know. So, and we've had a lot of green days, but we haven't gotten very far. So that tells me that we're really under a lot of pressure, and that is going to be overtaken. Now, I do expect this market to get pummeled more than the Australian dollar. Just because they're in a lot worse shape than Australia, and especially because of the lockdowns there. And I don't see that changing anytime soon, okay? So just to give you an idea though, right here, so 0.618. So this market, yeah, it's right in between that. There we go. Got it. Okay. All right. So now we have this nice little pocket that we rallied into. Now we had a buy signal down here. We had this corrective trend that came right into this target zone. We popped a little bit above it. We're flirting with resistance. Maybe we can get a bigger rally. If we go all the way up to here, well, then we got a little spot here. Okay, so we could possibly get up to here, but that would be if we have a really good reason to have a bullish surge. Like I said, this doesn't exist in this market, and I think you're going to have a lot of trouble with this last swing high area here. Getting above 65.71, this is the key level that you got to get above, and I don't think that that's going to happen. Should we get there? Well, then, if we can get above here, well, then somewhere up in this area, I would say you have a really good chance of it running out of gas, but I don't think that we have the ability to really push through resistance to even spike up there. I think if anything, we may even still flirt with the high, maybe take out the high from yesterday, but as we are back up at those higher levels, I think it's going to run out of gas and just go south. And as far as how far south it's going to go, I'm not looking for just a corrective move. This is still in a bear trend. I see it as a trend move going lower and taking out the lows. I think it's going to go down to 61.5, basically, somewhere in that area, at least in the short run. All right, US dollar, Canada. Let's see what's going on here. All right, no questions there. All right, very quiet today, not like it was yesterday. All right, today we have a kind of a consolidation day. You can see it's getting really choppy. US dollar, Canada, I was much more bearish in the longer term. This was already, I mean, this is the beginning of the year. Since then, it's been in a very wide range trade. As far as being able to maintain bullishness here, I can see that we will maybe be able to get up back up by those highs. I don't know if we can really get too much higher than that, though. There's too many counterbalances that are fundamentally and technically that are chopping up the US dollar Canadian dollar trade. There's geopolitically between our two nations, things aren't, they're not anywhere, which is crazy. I thought, I'm surprised that they're not like on the same page, because they seem to be, they're just not dealing with each other. Probably has a lot to do with the XL pipeline, and oil is helping to support the Canadian dollar. The interest rate problem, though, outweighs the oil issue. So as if we get a big, huge slide, then I would expect to see that we will have a turnaround of strength, and then we will have the US dollar Canada run back up towards the highs. But if we don't, if it just is gradual or it stays where it's at, then, and especially if oil doesn't have a big rally, well, then I think we're going to trod support some more. But I'm not looking for it to trend like in a very major way. I would think that you could press this correction. So where it's already close to that. There we go. All right, let me get this out of the way. Okay, so a failure from this last swing low has it looking to take this one out as well. And if it does, that doesn't necessarily mean that it's a bear market, but it definitely confirms that this is definitely back into a neutral to lower posture. But we got to get down through this swing low and then through this one here to confirm that. Now, once it gets into this area, we have this little issue of this. All right, so there's that consolidation there from last year, and now the question is, will we have another consolidation zone like that? I think that could really happen. So for range traders, it may be a couple months from now that you're going to see that we fall down in this area and then we just bobble around, meaning that we kind of snake around, you know, and just really hang in limbo. I wish I had more for you, but everything balances out. The indicators are all jumbled. The geopolitics are up for grabs, and then the strength in the commodity market, which is something huge for Canada, is counterbalanced by our interest rate policy. So it's a tug of war, and I just think you have your moments. You have to look for valid buy signals and sell signals. We had a good sell signal here, which definitely from this swing low to that swing high had reached our target point even from here to there. So now you need another buy signal, or you need for consolidation, and then eventually a sell signal to trigger more of a turnaround. But we have been getting signals. When the market pulled back, we had this buy signal here, and then we had this sell signal here. That's where you can act on right now. I think there's some good swing trading opportunities, especially like if you read the book High Probable Japanese Candlestick Patterns. Here you had a piercing line, here you had another piercing line, and then here you had a bearish engulfing line. All three of these are from the time frame of April 21st to May 2020 or May 12th. Excuse me. So 3 signals in that time frame, all of them yielding nice trades. We're waiting for another one. When we get one, I'll give it to you. But right now, as far as Canada, it's a choppy mess. And until we swing either down to a point and get a buy signal, excuse me, or rally back up into an area and get a sell signal, this is all I got for you, folks. So I just don't have anything more for Canada. So let's take a look at the Ptc Usd. This thing, talk about a consolidating holding pattern. It's going nowhere. That shake up in Luna and the other cryptocurrencies is really taking the breath out of Bitcoin. And as far as really maintaining any strength, I don't think it's possible for quite some time. I wouldn't say that you're not going to see a big rally up into that upper 30-something thousand towards 40,000 area. But then, boom, I see it consolidating and coming back. We had a nice big sell signal here. We don't have any buy signals right now currently. So we'll see how things go with this one. This is not the cryptocurrency to be trading or looking for action. So if you're looking for swinging action, don't look here. But when this one is going to move, I'll tell you where you're going to find out first is Ethereum US dollar. This one, look at how it's leaning on support. This is not good. If Ethereum is setting a higher move low, that's not a bad thing if this was done today. If it takes out this last swing low here, that doesn't bode well for Bitcoin or the rest of the crypto space. A lot of cryptos have gotten hurt, or they've been trending lower for months, but they've really gotten hurt in the last few weeks. And the question is can we get a sign of strength? Well, there are some that are doing well. A lot of them are consolidating now, going nowhere. This one was, today's activity says a lot. Now, the good thing is that we're coming off a swing low, a lower low, lower move high, and then we made right now we haven't made a newer move low. What we have had, though, from this low is a rally up to a lower swing high, keeping that trend intact, then a higher move low, started to go neutral, lower move high, starting to lean bearish, and here we are today. So we'll see how this manifests. I don't know if we're going to prod support anymore. If Bitcoin starts to fall out of bed to the downside and follow this, then I think you'll see Ethereum back on its lows. Right now, I think you flushed out a lot of weak shorts, and now it's going to start to get a little bit of a bounce here. Now, is it going to get a big bounce? I doubt it. But I do believe you could get somewhere up to there, or right there. So this would be a good spot to target to the upside, and then I think it would run out of gas also. So we'll see how this starts to swing around, if it does or doesn't. It is a case that where we have this lower move low, lower move high, maybe we set a lower move low. Key off of the low from today. Obviously, if we take out the low from today, look out below, we're making new lows. Then I think we'll get down to 1600, 1550, and then we'll take a look at it from there. Now, let's look at the USD, XMR, US dollar. Monero, now this one here, it wasn't consolidating. It absorbed all that negative cryptocurrency stuff very, very well. Now currently this market is in an upside correction. It had been trending lower. Boy, what a nice move over the last week and a half. Now we had a buy signal down here. If you read the book High Probable Japanese Candlestick Patterns, you'll know what it was. And currently today we have a potential sell signal forming. Now the market hasn't closed. We have always got situations where, hey, if the market was going to close right here today, right now, then we'd have this signal. But it's not time for the market to close. It's not even 10 o'clock Central Standard Time yet. But if it were to close right now, we would have a sell signal, a dark cloud cover. That's one that's in the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in Kindle and paperback version. And also, by the way, if you want to review the book on our website, Forex-Trading-Unlocked, you go to the product, courses, and service, go to High Probable Japanese Candlestick Patterns, and then we have a beautiful page here where we have a nice little video on some of it, and then we have the copy of the book, and where you can buy, share, or preview. We would hope that you buy it and definitely share it, but preview it first if to get a little taste of what you're getting yourself into. All right, so, and then you can also learn how to trade this pattern should it be confirmed after the rollover into tomorrow's trading. So we'll see how that's going. Now here's a cryptocurrency, by the way, folks, that you can trade. This thing's got a little motion to it, and I like it. From 180 to 220 is my buy area, and my sell area is from basically 275 up to 350. I think that you will continue to see this market snake along between those levels. I don't see it really getting above 400, not that it couldn't. If it did, I think you would definitely spike down and crash back down to the lower 200s, upper 100s, kind of like where the area where it's at now. Could we go back to the lows? Absolutely we could. But right now, in the midst of all that negative crypto stuff, and with Ethereum driving Bitcoin, that's the one that's wagging the dog. That's the tail that wags the dog. If that negative day holds, which it is, notice how that one is sold off today. This one is selling off today. This could bring out the true trend, which even Monero will start to go lower. So we'll see how this happens. Now remember, here you had found a lot of support. Now, boom, we're coming into resistance. So it's normal for this area right now to produce a signal such as this. Remember, it hasn't done this until the end of the day. But if that does manifest, then that gives us a good indication that this market will trend lower. So if you do own some Monero, it might be time to take a little off the table and then buy some back later at a lower price. Or, obviously if it goes higher, you just took some profits early, there's nothing wrong with that. Nothing wrong with that at all. So, but right now we're in the heart of my buying area for this cryptocurrency with the short-term sell signal. Real quick, we'll look at this one because it always cracks me up. The Doge is not looking good. It's back down below 8 cents. Look at that. This one's kind of looking like Ethereum on just on a much smaller scale. Is Ethereum going to trade down to 7 cents? Well, I don't know. Maybe they're all going to go down to 0. I don't know. But no, some of them have some viable technologies to use, so they won't be totally worthless. But a lot of them, especially something like this, and you got to remember this, that when it comes to your cryptocurrencies, for a year you had people getting all this free money, and they started all of a sudden trading crypto and putting money into it. Now they need their money for whatever reason, or they put their money in and thought they were going to become millionaires and billionaires, and now all of a sudden, well, think about how many people own Dogecoin from 40 cents up to 50, 60 cents. A lot. And I know definitely there's a lot of people between 30 and 40 cents that own it, because that was what they were all looking for, a pullback. And I heard so many people like, oh, when it gets back to here, I'm going to buy a ton and I'm going to make $1 billion. I'm like, okay, good luck with that. So, and good luck with where it's at right now. I know a lot of people that not too long ago just spent 50 grand for Bitcoin. Look at where that's at. Now that hasn't corrected like Luna and some other ones, but it's bad. This one also is bad. So, which that is a dog in and of itself. All right, so now we need to go to, we went through all that, so let's go back to the Euro US dollar, full circle. All right, so as we've been speaking, not much of a change. Interestingly enough, the numbers that have come out today haven't really shaken up the market, and I do believe that it's Thursday now, so as we trade into Friday, especially in the U.S., we're going to start to lose volume. I wouldn't doubt that there's a lot of people that are ending their week in the financial industry in the States today. I would expect a lot of the stuff that's going on now to be just algos, and then please, oh my gosh, don't trade holiday markets. So it's a good idea that maybe winds things down today and don't come into tomorrow unless you already have an open position you have to manage. Do not trade tomorrow, especially don't trade after this time tomorrow afternoon for the afternoon trade, because it is just going to dry up. When I say dry up, it will dry up. It doesn't mean you won't have big movement, but you'll have erroneous spikes that you could be long or short. It doesn't matter. You're probably going to have a lot of boom. It comes up for no reason at all on the 1 minute chart. And you'll be like, oh my gosh, why did this currency rally 40 pips and then come back all in the course of like literally a minute and a half, 2 minutes? Did anything happen? No. Thin volume and algos happen. Those erroneous spikes are caused by those run-ups to the upside and downside, which will chew up both sides, especially any smaller retail people. You're just throwing away your money. I mean, I'm not saying it has to happen, but it's most likely going to happen. I had lunch with a veteran trader, a friend of mine from the Mercantile Exchange, from the S&P 500 pit not too long ago, and we were talking about, it was when we were talking about a holiday market coming up, and I'm like, oh well, I never touch those things and blah blah blah. I'm like, you can't, going over these things. I'm like, you know how that is. And he's like, yeah, it took me a lot of years to finally learn that. He's like, I used to try and grind out money on a holiday. He's like, I should never have worked a holiday in my life. He's like, I'd have so much more money in my pocket. I'm like, yep, that's usually what happens. Even the professionals, everyone just gets chewed up and spit out that day. So Doesn't mean you can't go and try it. Do what you're going to do. I'm not telling you what to do. I'm just warning you of what's most likely going to happen to you. So you heard it here first, folks. Excuse me. So let's see if there's any questions real quick. None on Discord. We have none on Twitch either. You guys are kind of quiet today. See, that's another reason to see that, guess what? People are winding down their week. YouTube, just a couple watching, a couple likes, no questions. Yeah, you guys are very quiet today. So since there's nobody here really paying attention to me talk anymore and doesn't have any questions, we went through all the markets. Let's give one last review here. Bonds still, are they down-ticked again after how they came back? Let's look at the market data here on the energy. And okay, so when we started this webinar, oil was up just over $2. Now it's still pretty much holding at just over 3, up at 113.59. So that's getting towards that 116 area, folks. I'm telling you, it's going after it. When it does, this euro US dollar, they're gonna tank. You know, at least I believe they will. And especially with oil going up and then the bonds staying negative, yeah, good chance for that follow through to the downside. The one currency to watch as a final note is the US dollar yen. This, yes, we're talking now, it was slightly negative, now it's going positive. I do believe that this one here has some of your biggest bang for your buck because we're trading around 127.32 right now. This really has a high probable chance of getting back above 129 and pushing this 131 even area. So that's a nice $4 move, almost $4 move that you can, I'm not saying it's going to happen, but it's really likely to. So you can capture a nice trend that after it gets to that, it should still carry through to the upside even more. Because right now, like I said, the Bank of Japan, there's no way that they can honor their verbiage of defending their currency. We've hit 130. They haven't done anything. We're trading lower, but they know that we're bobbling, and the fundamentals are going to most likely challenge that area again. Maybe the Bank of Japan does jump in. I don't know, but I think right now, no, there's not a thing that they can do. I don't think there's really a thing that they can do. Not especially until they take that stance off and say, hey, we're not going to defend lower interest rates, we're going to go for higher interest rates. But right now, ain't happening. So that is something to be very mindful and pay attention of. These things are what help to keep you on the right side of the trade. And that's one thing that we produce these videos to educate you and bring you along with us on this adventure through the markets, but definitely to emphasize those points and also to keep you from losing money. It's one of the things that I would say is the most rewarding thing, and also the thing I get most compliments from either students of mine or viewers where they've started to change adapt their trading plans and incorporate more discipline and money management and risk management, where it has helped their bottom line and also kept them from bleeding, where I've definitely dealt with some people with even large amounts of capital where they start just hemorrhaging money, and I'm like, okay, so how are you trading? What are you doing? And then I'll ask, like, well, where is this, and why don't you have this? And like, well, I don't use that. Or, well, okay, well, right off the bat, that's what your problem is. Your risk, if you are not using the proper money management and risk management rules, you're going to, no matter what, lose over time. It's just a matter of when, not if. If you have discipline, money management principles, and a decent methodology, then any system you're using you can adapt to and usually have a much better experience and potential profit experience than you would with any other course of action or outlook. So with that being said, thank you guys very much. Want to remind you that if you haven't done so already, please subscribe to our YouTube channel or our Twitch channel, Forex Trading Unlocked. Check us out all the time on forex-trading-unlocked.com. Like, share our videos to your friends. Leave comments on the past videos. Watch them. We have some really good playlists on our YouTube channel. And also check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle version, written by yours truly. You guys have a great rest of your trading day. Thank you very much for showing up, and we look